Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here now on March 31st, end of the month, end of the quarter, 2025. So, my friends, we're early evening, not past 6:30 yet, and what a day it was. You know, when you look back at the quarter, the president took office. The stock market has gone down pretty hard since the man came into office. The dollar has reversed course. The gold market has roared to the upside. Energy prices aren't far from where they were, I have to tell you that. Interest rates are a bit lower as the economy is slowing down, and there's mass confusion. The confusion is, this is what the president told you he wanted to do. He's doing it. Now that you got your cake and you're eating it, you're sort of throwing up with it. You're going, what did I get myself into? Because at the beginning of all these changes, it always looks the worst. You know that. I know that. The president knows it. Is it a good thing? We won't know. History will tell us if it's a good thing, but it's a reordering of the world economics right now. The U.S. has proven we're a difficult partner in the time of war. The U.S. has proven that you could be the closest ally to us if you have a budget surplus against the United States. The Trump administration wants it back. I don't think if you disagree with that, you're not listening to what the man is saying. And he's going about doing what he can for it. He's even talking of running for a third term already. What's he, 3 months in? We don't know if we'd want him. You know, we don't know if we're going into a recession. He's got to prove himself. Don't just jump on that bandwagon. That'd be a terrible mistake, one way or the other. It's got to prove itself that what he's doing can work. You and I don't have a say in it. We're along for the ride. And if you're in the stock market, it's been a terrible ride, but nothing goes straight up forever. And this has been the most phenomenal run in a 5-10 year period since the pandemic that you can imagine. Portfolios have exploded. So people start giving back something and they're so spoiled that they don't understand it. Price earning ratios come back to earth. And from there, the game starts again. I really believe that that is what's going on. So it's a needed correction in the market. It doesn't mean it's a bear market. It's a needed correction right now. Now you're going to get a lot of news this week culminating. First, we got to get into Wednesday, the Liberation Day, find out what the tariffs look like. That's not the end of them. We don't know on Thursday that some aren't rolled back. Remember, according to the president and his press secretary so far, and he's got numerous secretaries because some of his advisors talk, as you know. He wants to roll out the tariffs, and then he may roll back some tariffs. I don't know how calm he'll be, how reciprocal he'll be, how, as he says, favorable he's going to be to some countries. We don't know what he's going to do just yet. And we don't know if it's all happening in one stage or one big rollout. There's just a lot of unknowns. What we do know is we're going to get the jobs report on Friday. We know that that's got to be looked at. The numbers estimated to come in lower at about 125,000 new jobs. We'll see if it can buck that. And obviously, the first time you crack 100,000 new jobs, you know the information and the headlines are going to be the economy's in trouble, blah, blah, blah. As for the news that we get tomorrow, you're going to start off the day at 7:55 with the weekly Red Book sales. Then you're going to go to the S&P Global Group and the final March manufacturing sector PMI. The word is final. You had a prelim. The construction spending data for February comes out tomorrow at 9 in the morning. The all-important JOLTS opening. So that's the jobs opening, labor turnover summary. That's always important. That's going to be at 9. You're going to get the ISM releasing the March manufacturing sector index at 9. And it culminates at the end of the day with the API numbers on the energy. So let's go to the chart market, take a look and see what we've got. In the stock market, if you finished here, you'd be for the week up 0.29. So a little bit of a gain from last week. You can see how the market came down, came back to these lows and got a bounce. I was expecting the market today to go start one way, maybe go the other. And it was a day trader's delight. I was looking to see what my firm did. I get to see all the runs all day long. And a lot of day trading was going on. When you take a look at where you're at, you have a higher high, lower low pattern. That is not a trend. You and I aren't blind. We can see the market's gone down from these highs and made a new low for the whole move today, came back and closed with a slight gain. So for the month, about where you were on Friday, not very much of a difference. You're under all the key moving averages, which are the 100, the 200, and the 18-day average of closes. The market was supported by the Bollinger Band. How often do you hear me tell you, go to our website and take the enhanced Bollinger Band course? Went right to it, another cover spot. Now, you have to understand, getting a band this wide is very different than having a band this wide when the market latched on to everything. You've got to know how to play these, and often the width of the band gives you a visual idea as to what it may or may not do. In this case, to me at least, I was expecting to see support at that number, purely because why stay beyond it if you're a tech trader when 95% of the time the market will stay within the bands, and you have this huge event taking place on Wednesday. The same thing happened in the NASDAQ. So I can see rallies coming back if it wants to the 18-day average, but I don't see these markets all of a sudden turning into a major bull off the chart action. Could it happen if the tariffs are so much milder than we think? Absolutely. What if they're worse than we think? Another game starts taking place. I just don't know, nor does anybody else. The Dow didn't make it that low, so it's saying it's stronger than the other two markets and other three markets, because you also hit it in the Russell, and you could see the market stop there as well. So let's applaud it. The Bollinger Band concepts work there. In the DAX, you fell all the way back to the Bollinger Band. Why? Because Germany's right in the sights of the president. Auto manufacturers, Audi, Mercedes, you can go on and on. They're there. What about the rest of their industry? So you've got to pay attention and understand why this gave up something. Now, the inflation runs in France and Spain were very low. They came in near the 2% area. So for all purposes there, you're fine. I'm already seeing, though, in the Eurozone that some of the bankers that are on the Monetary Policy Committee, and remember, there's a meeting April 17th, are balking at doing anything until they not only see the tariffs, but they understand them. And that's going to be the hard thing, because you're liable to get them and they're liable to change. Remember, we saw them go on Mexico and Canada, the next day come off. We have USMCA. Is the president going to violate that deal? I can't begin to tell you what he's going to do. When we see the 10-year notes, no surprise here. You've got a tight enough band where you're whipsawing. You've gone from the upper band to the lower band to the upper band. Nothing would surprise me. You might go back to the sideways action. Is this thin enough to develop a trend from? Yes. So unlike the width you had here, now you're always on the lookout. Is it going to grab hold of that band and try to force a breakout from it? Now that's different than the width here. Keep that in the back of your mind. See how it narrowed in there and then it launched? That's what I'm saying. You're always on the lookout. When you look at the 2-year note, same thing. It's thin enough where that can happen as well. Not so in the dollar index yet. The dollar index is just beginning the process. So this width of the market gave way to what? Low volatility. As the volatility came in, the market kept hugging the 18-day average, and it's waiting to see whatever the next move is going to be. The markets aren't stupid. You're looking at price action. What people are saying is, hey, do I want to really make a move right now? That's the hardest thing. I can tell you what I've got my futures traders doing. Pretty much nothing. Yes, I am moving in and out of ETFs. That part of it is going, but not in the futures. The leverage can kill you if you get wrong in the futures. That's the problem. I know you're going to trade smaller. Or why trade? Why not wait to do your normal things? What am I waiting, 48 hours? I think I can do that. Look at the pound. It threw out new bear signals. Now, in order to negate this, you've got to take out today's high. You had an outside day down. If you take that out, then the 130 area comes into play. If you don't, is this setting up a pullback to the 128.70 level? It could be, but it's very narrow. And again, it's right in the line of fire with whatever the president does. Bitcoin has been a dog. No other way to say it. It's down for the year about 13%. It hasn't participated and offered anything in the way of a safe haven. Gold has been the safe haven play, not this. This market's more tied with the NASDAQ. When you look at the energy markets, they've come back. So if you and I take a look when the president came into office, it was up here, right? This is the month of January, right through there. You broke down hard. The president was getting all kinds of credit. All of a sudden, it's not there because Iran is mounting missiles on launchers that it can fire at Diego Garcia, that it can fire at other areas. They've said that anything the U.S. does, Britain's open game, and the president's threatening military action if Iran doesn't come to the table to negotiate about its nuclear development. So that's brand new over the weekend, and that's picking up steam. What else do you look at here? Venezuela, their oil, buy it. You're going to get tariffed a monster amount for any products you send to the United States. Russia, threatening the same identical thing. So he's taken Iranian oil, Venezuelan oil, and Russian oil potentially off the market. That's not bearish. That in terms of that is bullish, even if the economies of the world slow down, less supply potentially. By the way, where would Russia sell its oil that this happens? India is going to care about its trade balance with the United States, because if the president holds true, they'll get tariffed like mad. China has already said to the U.S., so what? All right, higher lows, higher highs in the crude, still going for it. Same thing in the heating oil. And you know I like the nat gas from what? Well, I think it topped here. I think it bottomed out against the Bollinger Band, hit it once last week, and now you're back to neutral territory. So you're waiting. And that's what the markets are doing. So don't try to make something out of nothing. I sent to every one of you that are on my mailing list that are not a current subscriber of mine. This doesn't work with anybody that's a current subscriber. I want you to come in and join us. At least give it a 30-day trial. And how do you do it? I've made it cheap, and I mean real cheap. You can try us for 30 days as low as $3.95, and then you control your subscription. You can buy it, cancel it after that, do whatever you want. And by the way, if you decide to cancel, there's a way to do it on our website. You pick the date when your subscription renews, cancel it before then, it won't renew. Your cost. You'll see what happens after that. Read everything. I sent an email. It's not available here this way. If you don't see it and you're on my list and you've got stuff, go into your spam. It's in there. I'm Ira. You have yourself a great evening. I'll catch up with you all tomorrow.